Ooh, I was asleep for a little bit. Yeah, I was tired today. But we did have a amazing day in our Discord. Yeah. Um, we let's see what's up with the Discord. So, long story short, checking out NQ was a very solid day. We look at algos. That was my trade from today. Um, smacked NQ from the top. We had New York Q1 90-minute cycle liquidity open still, and I'll show you what I did there. Probably not in this video because we're going to talk about gold, but long story short, you just have to understand where the market is really going. And I'm not saying just basic liquidity, but I mean when you're using a certain partition, it gives you a lot of opportunities to get in and out a few different times. So same way we see how you got to just get into how the marketplace likes to move. So again, you guys are welcome to join the Discord. We're here every day. Um, Now back to gold. Where is oh the lighter is in my lap. I feel like that's a like you'll never hear me make one of these videos without smoking it backward. You'll never hear me do that. Which is really funny because yeah, I smoke all day, bro. It's not gonna stop. It's funny because that sounds like my intro, and I don't even have an intro. But long story short, let's look at gold. All right. So, in this video, you could probably tell from the title, we're talking about high time frame media rates. Interesting. And the more oh, it's trying to yell at me for not charging it, but we'll do that. Now, oh no, took too long to hit the weed and it went out. Got relight it. Talk so much the blunt goes out. Oh Lord. High type rate PD arrays. Okay. Now, the biggest thing I need you to understand here, all right, since I say it 50 million times a day that the marketplace is fractal, all right, you need to come in and understand the same way that we got down on the lower PO3s, the 3, the 9. We saw how SPY, QQQ dominates those, okay? Let's go to some higher PO3s and understand what the marketplace is up to. Yeah, obviously it looks annoying like this until you take everything off and we mess around on our higher time frame. Now, what I want you to get used to doing, right? This lecture is mainly about time and price. So we never come into the marketplace looking randomly. We always have a definitive starting and stopping point. So that means when we have like, again, I always do distribution cycle for the year. July, August, and September needs to be when you are ready. So next summer, tell you that right now, take this year, learn, okay? So next summer you could come in and dominate, all right? The reason why I say that is the same way we look at 90-minute cycles or AMD, okay? It applies to, and again, we're going to do July, August, and pull this to October. So this is like coming into Q4, October, right? So right here is the entire, and what you're going to like outline for your study on any asset, all right, is you're going to focus from July to October, all right? These are the best times for you to really get in the marketplace and go crazy. All right. We're going to look at the entire year so far, obviously, like from January until now. But the problem is when people don't have a definitive starting stopping point or understand what the price has already done, they don't really have a real sense of like up or down. And that's why high time frame in general is important and why PD rates are important is because we understand where prices in a offering you a structure based on math that is repetitive. It's algorithmic. When you're looking at certain things in the marketplace, again, on the daily chart is clean. Because again, it's not too high of a time frame to where we can't see where the marketplace is starting or stopping each day. But we can also see what price is offering us in terms of an objective. All right. Now, we have, I wanted to put this in, keep forgetting, Q3. So this is like Q3, which is typically the distribution of the year. Now, again, I mentioned there's only two processes. So again, on the higher time frame, it's doing the same thing. It's either AMDX or XAMD. All right. Now, or that's all too much. When we're focused on Q2 and Q3 and Q4, it's for a reason. All right. People not having any type of patience in the marketplace, not some, even when it comes down to 90-minute cycles or a Monday or in Asia or anything that resembles a accumulation cycle. Do not trade that shit, man. Let that shit go. All right. Regardless of even if it's like a X and you can realize it, you can let it go past you, and I guarantee you, you will not miss anything good, realistically. AMDX or XAMD, right? Again, if it's playing out on the year, if there's 4 quarters to the year, right? Again, 12 months, right? 3 months each. 4 times 3 is 12. Main thing I want you to focus on is Q2 and Q3. So let's throw these both in. And we'll look at the price action and determine which one is which. Okay. So it's January, February, March. There we go. And so we're going to label this a different color. All right. Let's do light blue. And I just want to come in with manipulation, right? So July 23. So you have Q1 here. So we have. Now I'm going to show you another tool to do this with that makes this a lot easier. But I'm showing you this way on purpose. All right. So we're focused on Q3, whether it's AMDX or XAMD, and we're looking for high time frame PD rates. All right. Now, the biggest thing that I want you to keep in mind here, all right, is we're looking at 3 months at a time. So, okay, January, you have February, and you have all of March. Okay. So when you get to April, May, and June, this is going to be your Q2. Okay. And so January 3rd, we're going to put the obviously January 2nd because that's our first trading day of the year. Lock that. April, lock that. Perfect. So what we do, start of the month, start of the quarter, start of the week even. Right. You want to come on and basically marketplace is fractal. Okay. So I can use 3 days at a time if I want. But you basically want to come on like when the new quarter starts and you want to evaluate what's happening. Okay. So realistically, this is so clear and so clean. And so the same way we can look at a 90-minute cycle, it works on your higher time frame. So do you see the price action here, right? And this is a really, really nice expansion candle here. Obviously, if you look at the price action right between January, February, March, right? 3 months at a time, what happened in that time period? This is why I say you want to wait till the next quarter to really check it. Because right here, you have a accumulation type of profile, but it offers you like a completely X looking move. That's definitely X. It's too trendy in here. Takes a little while to move, but too trendy. 9 out of 10. You're going to look at this at first as the A. That's fine. But that's again, you have plenty of time left for you to see what this is actually going to close in terms of expected price action. So all we're looking for, again, if it's too trendy or if this is going to be a complete consolidation, you run down, run up. Now, the real consolidation or the real A, right, is here. And that's our thing. It's not that obviously that it doesn't move. But if you're looking for some of these insane, insane runs and you're trying to be um, in sync with the order flow of the marketplace, you do want to pop onto a higher time frame, see how the year is playing out. Stay in line. Because when you notice that, again, I talk about this in another video. We talk about weekly profile, but again, when you're noticing XAMD, going into that, and I gotta like shape this a certain way so you feel me. All right. So here, I'll put on like January. All right. So you have September. So yeah, January, February, March, April, May, June. So July, right? And this is a little too far back and we locked it. See how I hate that? We have to move that. That's why I locked these. But, oh, no, no, no. It's only because we're on a 3-day chart. Got it, got it, got it. So we can actually move that back. I see. Anyway, so when you're looking at price a certain way, we're setting up Q1 through Q4. and you're looking for expected price action. When this is X and this starts consolidating, this is clearly an A. All right. And the reason why we're talking about XAMD first or AMD in general first, and understanding me, right? There is a method to the madness. You don't have to come in here and be super confused on the high or low time frame because if price is really fractal and it's doing the same things where you're looking for PD arrays, where do you think you need to be most attentive to in terms of Q1, which is X, Q2, A, or our Q3? And it's funny that when we're looking at A, X, and D, this is clearly not D now. M. So that means we're not even in distribution yet for gold, which is basically my point. Okay. Anybody who feels like they missed anything in here, don't. Don't feel like you missed a thing. Market sets up so many opportunities on your high and your low time frame. I mean, extreme ranges. And the reason why I'm looking at gold for this concept is I really only like gold from really, really extreme areas. And what I mean by that is I'm not talking just dealing range, but I'm talking like, you know, while using daily ranges, I love when price gives these little pockets, right? These little points here. I love these points. And these are clear as day. And obviously being on a daily chart, it's a little joke. I know, it was very funny. But point is, when you're watching this, right? What I'm doing is I'm highlighting areas you need to focus on inside of accumulation. And again, if this is 3 months of this can get so difficult for people because every single day it could offer you, I mean, good moves. Sure, it has a good amount of value, but at the same time, it is going to give you that annoying, can't stay very long type of price action. And look at all this in here. This is really, really rough to deal with. I mean, obviously, we're going to come into scalp gold in these conditions, but you have to understand how you're trading for this part of the year is different. That's a lot to handle versus having price give you definitive directions for a better part of, even like 3, 4 weeks, you know? And the whole objective of the game is to know where you're going. Slight pullback, right down. Goals bearish. When you change bias, it's consistent and it's comfortable. Consolidates for a little bit, takes liquidity here, and right up, right? Takes out Q1's high. Perfect. No problem. Easy. And so this is much easier to deal with. But again, when you start to realize that this is X, it's probably going to be a couple weeks into here, and you're like, wow, really trending. Like we went kind of far. Like going from 2180 back down to 2092. Yeah, that's a quite trendy for a month. Okay. After about a month or so, you're going to realize that that's an X. So you're going to start playing gold a lot more. Assets move slightly different. Not every single thing in the marketplace is going to move the same. If gold might be on XAMD for the year, you might see something else on AMDX for the year. Go and check it out. That's why I want you to be conscious about not you looking to press buttons every 5 fucking minutes, but you actually coming in and being logical about your plan. Even if you're an intraday trader, you need this type of information, and I do not want you to skip over it because you're going to have the advantage. It feels like a home court advantage. When you pop into this A, now you got to be wary. Your X price action doesn't stop right away. Okay, you got a while. But when you start to get to this down run here and you start to see this, bro, either find another asset that has AMDX and so you can trade a more direct manipulation cycle and it's a lot cleaner for you. But when you start to deal with some of this accumulation in here, oh my God. My God. This is not fun. I mean, every which direction, that's not fun. And we can actually zoom in that. So the reason why I say this is not fun, obviously you can scalp this. But when we're looking for consistent, nice runs, and I mean like, imagine if you're a swing trader or, you know, not saying you can't enjoy this drop here. Obviously, there's a plenty of evidence to support this being bearish. But when you're popping down, let's say you obviously knew about these equal lows here. Okay. All right, you got the equal lows. So it takes these equal lows. Of course, cool. But what do you do in the meantime? Yes, you make another run up, but you have how many days of solid consolidation before you make a run? It's about 1, 2, 3, 4, 5, 6, 7, 8, 9. It's 10 plus days in here of consolidation. Oh, Lord. And again, not that we can't scalp it, but again, as for somebody who likes, looking at the chart when you have extremes or you have a nice catalyst that leaves you with a certain bias for a few days or a few weeks or whatever, right? So it makes sense how you come onto a daily chart. And again, smart money players are operating from a daily and a weekly perspective. So coming in and finding the abundance of liquidity is always going to be a good thing about the daily chart. But again, the same way I'm highlighting, again, the very first PD break that we're talking about, we always talk about fair value gap. We always talk about liquidity void. We start there. When we do our whole lecture series about order blocks, that'll be a whole nother monster. So when we talk about these equal lows here, we actually make equal lows again, right? So these don't really get attacked. So I want you to be really, really clear about how you're interpreting price. People say, well, we ran these stops here. And I'm like, whoa, hold on now. You said we ran these stops? Or did we make it to the area of where these lows were? And look, these are all equal lows, triple equal lows. These are not swept. These are not fully attacked. You're going to need to keep that for later, okay? So when we're talking about, I'm gonna have to roll another blunt. Like, oh man, and this weed's pretty good. I'm not gonna lie, that was really good actually. But damn, Jay, you just be smoking back to back, don't you? I know, no other way to do it, but my guy. All right. Now, when we're talking about these equal lows here, let's get into our Goldbach levels. So again, if I'm talking about XAMD, we understand the perspective so far. So that means X is going to be trendy. Your A is going to be a complete, again, not a mess. You can come in and still do some damage. It's going to offer you scalps or still a good amount of trades within the quarter. The only thing is you need to be really, really adjusted to these sharp turns. Okay. You need to be really, really adjusted to the amount of consolidation offered to you that's over 10 days long. You see it again here. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15. I'm giving you 10 for a reason. I'm getting you to think about price a certain way. Okay. Matter of fact, not 10, do 11. I want you to think about 11 days at a time. Every 11 days, your consolidation is going to start breaking or trending. Okay. Really start to think about this. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. And then you do what? Watch. I'm telling you, I've back tested it. I've been through years of price action. Count 11 candles randomly. We'll explain in a later video series, or if you come to the Discord, you'll have a full understanding of why that number is important to me. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. As soon as we stop, you start to consolidate. Then you drop. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, and 11. You get 12 per good measure, and you go up. That's not a coincidence. J. Damn. Yes, there is a certain concept that my students and I basically discovered in a certain way. Again, just in our own work, I mean, there is obviously ICT, hobby inspired stuff that we do, but candle counting was popular coming online a little bit on X or Twitter or whatever. I don't post a lot on Twitter, but I read a lot on Twitter. I see what the talk is all about. But realistically, when you're looking at like certain things in the marketplace, you can, again, we talk about time and price. So the more you understand about how price and these candles arrange themselves, it's on a strict schedule. Price needs to be in a certain place at a certain time. Smart money needs to move this money efficiently and with less cost. Okay? Now watch. This A profile. Obviously, when we throw on our Goldbach levels, and I talked about how gold is not like NQ. It's not like, other assets. You can use uh technically like a smaller PO3 and dominate the year. Like really dominate this thing. And so like right now, let's see. Do you see how I'm downshifted for a reason? So yes, we've talked about all this stuff here. Let's clean this up a little bit. But we'll get to candle counting on another video. I'm just giving you an intro to, again, how I can go out, count 11 candles, and I get a reaction. Now, again, I'm going to bring back the um, same information I just did with the year. But like I said, I was going to show you another way to do it. So you don't have to come in and do that and feel like you're a slave to these trend lines. All right. There is a tool called the GAN box. All right. I want you to get into that. And the GAN box is very, very good. Show you why. Now, me personally, I do a few things here. I have a couple different GAN box settings. All right, I'll show you what I mean. So let's move over here really quick. All right. And so, all right. I have a GAN box for again, the way you can look at this is like Monday, Tuesday, Wednesday, Thursday, and Friday. So there's 5 panels. All right. But we also talked about by itself AMDX. Now I'm gonna try to see if I still have this template. I had 2 templates, but I also have 2 TradingView accounts. So it might be on my other account. So let's see. I have these settings in here. If you guys want to steal my Gambox settings, that's totally fine. All right. I'll leave this on the screen for just a second while I start working with my hands. Right? You know what that means. Mm-hmm. Scroll down for you. All right. You're going to copy these settings. All right. And so you want to save this one template by itself. You can say, again, the way I'm looking at it is it's 5 panels. This is really a week. All right. Now, that's why like I applied it a certain way. But realistically, it's saved in here. I think I only have the um, settings for that one a certain way. Yep. No, it's fine. Any other one's the same way, I believe. Yeah, it was just colored differently. Yeah. hmm So I had to do another video on the AMDX fractal settings, but we're going to come in and I want to show you something. Okay. Your GAN box, the same way that I could put it on a measure of time, right? So really quick before we get back to our Goldbach levels. GAN box. You can do some cool shit. All right. Now we're looking at 24 is what I want. Jeez Louise. There we go. Now watch. So what I can do is, this is very special. We're talking about high time frame PD arrays and how fractal the marketplace is. All right. So we're going to drag this to January. Now, why is this interesting or not? It's the same way we break down price. I want you to be comfortable with this. And the same way that I can come in and say, whether it's 4 panels or 5 panels, wow, I was lazy on that one. Now, the reason why I typed it out like that, right? Again, it's no different. So the same way that I can apply my GAN box, I can easily, quickly come in and throw my lines in, and it separates my, see what I mean? January, February, you have March, April, May, June. And even though this is slightly different, because I have an extra panel, the marketplace is fractal. So I could come down, and the same way that I could pop onto a daily chart, and do you see how my X to my A gives me a little extra space in there? Now that consolidation looks a little different. But when we get to a lot of this price action, right? Your A gives you a little extra push here before you consolidate. The funny part is, watch this. Oh, we forgot to plug in the PC, didn't we? It's yelling at me. Let's plug them in. That way we can talk about Goldbach levels. Dope. Now watch this. Since we understand that this is a XAMD, right, we can verify it more than one way. When we're coming inside of these little panels here, and it separates all this, this is no different from a weekly profile. So XAMD can be offering you a Monday low a lot of times. You got to be comfortable with that. And so when people say, how do you know? Your X is normally the low of the week on a real Monday. Yes, you could break the year down into a week. Yes, it's the same thing because price is fractal. Yes, it's going to offer you the same sort of data that you can use to stay on the same bias for weeks, months, days at a time. What's cool about that? You understand now that we talk a lot about function on this channel. So it's not just about the weekly profile, it's not just about XAMD, but understanding these ideas lead you into being a better narrator. You're letting the chart tell you what it wants to do. You're no longer forcing your own bias upon this thing. You're not forcing your own way or will upon this thing to make money. All you're doing is simply following directions and understanding function. All right? Algorithm is a tool and you use it. It's no different than like, you know, handing somebody a skateboard and saying, you know what? Here. Okay. Until you learn how to stand on it, the right posture, how to bend your knees, until you understand how skateboards work. It'll be a mystery to you and you feel like it's difficult to navigate. And being a skateboarder for over 20 years, bro, I had that same approach to the market. And so when you have the algorithm as a tool, it doesn't scare you after a while. Learning how to use this because it's not random. You come in and you plot. So you're like, listen, I understand that I'm in an X situation. I'm going to be, not saying it like that, not to over leverage. I'm probably going to be a little more aggressive in my day trading and my swing trading in here. I'm probably going to be less aggressive coming into my accumulation, right? And when I get to like a M or a D cycle, I'm going to be, again, slightly more aggressive. Yet I'm going to be more um, understanding that I can hold inside this area a lot longer. I can come in and not, um, be plagued by Monday consolidation, you know? And so even inside of like certain cycles, right? And I want you to get comfortable with this, right? And again, just January. Watch. You always have the levels, bro. You always have the levels. No matter where price is already printed, you already understand where price is going to react from. You're never not informed. So when price is doing all this bullshit down here, all right? All this bullshit. Let's change colors because that's annoying. There we go. Cool. Dude, every time you see me do that, that means I forget I have a touchscreen. Every time. That's interesting. But we are focused on every time price jumped into the dealing range high in EXT, jump back down. To the high in EXT, back down. To the high, and one more time, back down. The reason why this was interesting to us, right, is again, we talked about the what? How do you stay informed as to where price is going to go longer term? You need a PO3 for your wireframe. This is basically where you're and I love that word. I mean, if I don't use it how other people like to use it, I don't care. But when we talk about this, right? Let's clean this up. I want to basically highlight the stop run here in general. Underneath the low, it comes down just for a stop run. Like I said, we take some type of liquidity down there when we run into a previous dealing range and we just immediately stop and don't fully go through it. And I'm specifically talking about the 243. So when we come down, right, and again, we may have not fully completed one, or maybe we have, right? We can check it. So additional range down. And there you go. We did. So yeah, we had two 243s. But when we get to January, right, we don't need to come all the way back down to, I'll show you one at a time so it's clean. When we came back down underneath that dealing range, look at all the price action here and all the way down here for context. All right. Price played this dealing range already for sure. All right. We've played that dealing range. When we jump into this one here a few different times, right? Price is clearly bullish. It's going to come down and take some liquidity in here. And blast up. That's why it's important to understand DR shifting. So when I do it like this, right, and we're doing what's called hold shifting, all right? That means I'm going from one complete dealing range to the next, all right? Now watch. This is our stop run, 243. If we go down fractal, we could find this at an actual low, all right? Now, the low in this area of this dealing range is 2187. And this is a really, really, really important number. Why is that, Jay? Now, really quickly, I want you guys to understand something. All right. Gold, 2,500 an ounce right now. Okay. When price was trading all the way down here. Okay. And this is 1,900, 2,000, like 2,100. All right. All this after January, though, is important. When you're spooling down like this, and we're coming away from 2187, the reason why I keep bringing that number up is 2187 is an actual power of 3 number. You need to pay attention to price on these numbers. When you have the rare chance to attack one of these real Goldbach numbers, yeah, you need to keep that in mind. So all of the spooling down here, and again, we understand that gold, once it really gets set in its direction, it's rarely going to stop until it meets its objective. What I mean by that, not just dealing range, but do you see how, again, we've been bullish this entire time with small dips, like I said, because of XAMD, but at the same time, gold is very consistent. It's not going to stop this up run. And Q is going to offer you a lot of up, a lot of down, a lot of up, a lot of down. It's going to really start playing ping pong between the premium and the discount of the market. Gold is very objective oriented. It likes to go for what the fuck it wants to go for, and it's going to take days, weeks, months, even years to get to that objective and not give a fuck. It'll go the same way. All the time it does these massive rips back down is really because of news. And you have higher time frame rebalancing of structure. Now, we talked about this 243 so far. Let's get into these PD rates. I told you, these lectures are not for the weak. So if you are not comfortable with these types of videos, you can find this content elsewhere. My goal is to educate you all the way. So that's why we talk fully. So let's get these out of the way. Now, when you're operating this 243, right? And again, daily chart. Again, keeping it clean. All right? Price just rips through this fucking thing, doesn't it? How do you trade this? If you're comfortable again with my fair value gap, my rejection block, order block levels, all the way to my liquidity void level, like I said, these are the core participation levels we talked in the last video. All right. Now, these being like core levels or whatever, they're easier to trade from. These are very fun to find. Again, majority of your favorite PD arrays, obviously. But my point is, when you're looking at price that doesn't look as clean, I mean, it just rips up, which is not a bad thing. But if you're somebody who doesn't feel comfortable in the marketplace without an imbalance, or doesn't feel comfortable without an order block, this is for you. All right. So again, we're on a daily chart, and I talked on this before. PD arrays are time frame specific, right? So when you're popping into this area, and again, March, right? Notice I'm on a daily chart, but let's highlight this here. Now, again, really close to my fair value gap level, but I'm interested in the fair value gap and the liquidity void because they're always next to each other. Okay. Blue line and the next big box, one of the biggest boxes, due to it being a 12% jump in the algorithm. This is going to be one of your bigger Goldbach levels, liquidity void. Now watch. Damn, my guy. What am I looking at or reacting to? See how we had to go to a weekly chart? And this looks a lot cleaner of an imbalance. And the whole object of the game here is high time frame PD arrays starting with fair value gap. Yikes. Why do I say that? Now again, if you're a intraday or a swing trader, this is going to be of interest to you. Understanding where your real fair value gaps are, whether you're on a low or high time frame, you need to be able to come in and say, you know what? Yo, we're at the bottom. So your friends might say, well, how do you know that? First of all, you're in a discount. And I'm going to play around with this and I'll show you. Equilibrium mode. Between 0 and 0.5. Discount. Market. Premium market. And again, what you're doing right now is what we call calibration, right? So you're not always looking to hit the fucking button. But this is great context for when you do know that expansion is coming, you know exactly what to look for, you know exactly where your target is. You cannot be a seller. It just won't work. You cannot be a seller in a discount. So when you're in this area here and you see this Discount fair value gap, obviously it's blue, it's bullish. Look at the rebalance of this thing. It's so perfect. 1 week comes down to tap that thing and you're gone. You can stay on buys every day until you get to the top of this dealing range. You want to know something? Watch this. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. Then you consolidate for a little bit. Then you move again. That's so stupid. But again, you want to learn more about candle counting, come to my Discord. There's a reason why this is so interesting to me. When you see this bullish fair value gap, and again, we need a levels on. So equilibrium mode just really focuses on your premium and your discount. All right. Again, you have to be a buyer in a discount. Forex is like a store, right? You want something for a discount. If you want to be a buyer, right? If you literally want to buy anything, you want it at a discount. You don't want the higher price for it ever. That's why it's called the futures market, Forex market. It's a store. When you're selling something, yeah, price is bullish, but you need to be looking for sales and a premium. You sell something, you want a high price for it. This is considered a literal like discount. Understand that. All right. Now moving on. We had to come up to a week so you can see that fair value gap. On the daily chart, it's not as clear. It's just one simple run. It looks like it keeps running. If you need a Pediarite, come up to your weekly, and it's still going to be associated with your fair value level. You want to know what's funny? We're going to go up one and down one. And I'll show you why that's important. So we're going to go down one because gold runs on lower PO3 numbers anyway. I talked about how much damage you can do intraday on like a 3, 9, and even like a 27 for a while. Okay. Now we shifted it down 4 times, and we'll look at it this way first. Now we need to come back down, change the time frame so we can see. And yeah, the question I get a lot is, hey, well, if that was a real fair value gap and that was coming out of the level, does it still work? How if you run it right back, can you see the weekly chart? How that fair value gap was going through my fair value gap level, but the rebalance of it was not on the actual 243's fair value gap GB level. That can be confusing. Now we pop down here, right? You see how my green line was our fair value gap, and that's our rebalance of it, right? But I want you to look at something. I'm just going to replace this. So we're looking at the top of the fair value gap and the bottom of it. But peep my drift though. Peep why I talk on this a certain way. All right. That's your gap, right? Poorly drawn, whatever. Fuck me. Okay. The rebalance here, when we bring it down to a lower PO3, so we're on the 81 now. And then back to our daily chart, because we have to find the actual imbalance on the weekly. Okay. But notice we're in a, on this one, it is a discount. My bad, premium. It's a premium fair value gap GB level. But you see how we actually touch the level here? But where is majority of your consolidation? The bodies are respecting the fair value gap level. Your wicks are doing the damage here. There's not too many candles that close outside of that GB level on the fair value gap. But now, when you put it to me this way, you're like, damn, well, that sucks because, maybe I do want to buy it, but what if I'm looking at the 81? I'm not comfortable with that. We talk about shifting your dealing range, whole shifting so far, so you guys are not confused. When we have the video about half shifting, and basically it's to come in and when you need to use it. Oh God, not 30. Okay. I'll watch. Let's come back here. So we're going to do the replay. Now I want to show you what the dealing range looked like at the time. Now watch. Now we talked about this being a discounted fair value gap in the 243, but we're trying to trade from the 81. Okay. Now watch. Price is printing. And so we're in this area, right? See how price makes a stop run here and goes down? Okay. Now watch. Obviously, we're going to shoot up and watch this area. Right there. All right. So now, do you see how it creates a bullish scenario? But you also have a run underneath this dealing range, right? And we break back into this 81 above you. Now, when you see price perform a certain way, then you're going to come in with your specifics. PO3 liquidity leaves more liquidity for you. But we've already talked on that weekly fair value gap. So when you're coming down on this daily and you see how price supports again here, you're already looking for buy side scenarios. Now watch. We can take this and your half shifting is going to be a lot more helpful on lower PO3s in my opinion. But it's only shifting this enough so where you can see like where stop runs are going to occur. I like looking at it the same way that we talked about it. So a lot of times I'm not half shifting it a lot, but I'm whole shifting it a lot. So I'm going to see where, again, not just shifting my dealing range to see like which one is the wireframe, which one I want to trade from, where price is going overall, shared highs, shared lows. But I'm also looking for how price got there from left to right. So we jump into this dealing range, aggressively break in, stop run the previous, and complete the one above us. No problem. And again, we already have PO3 liquidity, so this was an easy situation. Now again, coming from a daily chart, 81 now, right? And this is our last dealing range we need to talk on. Watch. Now down to your 4-hour, right? And this is still like a high enough time frame where you're still going to be able to come in and see really cool things here. Now, notice what I said about every time you see a stop run. Now, you could come in and use half shifts if you want price to be more, it feels a little like not feels form fitted, but it'll start filling in some of the space for you down here. But all this for me, I don't mind watching this play out all the way. And so again, I mentioned EXT level being the discount to the discount. This goes a little slightly outside of it. I like to see support right on it and consolidate before we jump up again. This is a clear stop run though. You could see it from this. See that? Now also what you can do is equal lows. Now, do you see how these got attacked? Like these were fully attacked. This came down so aggressively, and it did not stop here in a lethargic, supportish kind of way. No, 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 no. It came down here and broke that. Came down, broke them again, and did it again. This is aggressive. This is manipulative, isn't it? That's what I mean. Understand this, right? Slightly outside of your 81, and you stop run. Okay? Now, what you're also going to see a lot of times, and we're going to start talking about this on the next part of this, on the part two. But the biggest thing is Hoppy said something very powerful. It's called PO3 minus 2. When you're looking for stop runs, the same way that I can come down here, if you're on, and I'll be clear with my cheat sheet, okay? If you're looking at structure and you're on the 729, you're going to look at the 81 for stop runs. If you're on the 81, you can look for the 9 for your stop runs. When you're on 2187, you could look for the 243 to give you a stop run. And a clear one too. So the same way that we could mark price like this and come in and notice how my first tool, I just changed it around. I like the price range so I can see things. Now, from this low point to my EXT. Now, to you here, it's 25. No, I'm not going to form fit it because I don't need to. You know why? Notice from, like I said, this is that sharp move that goes down here. Now, from the low here to this low, or the wick, the very bottom point, is 25. Yes. Now, as you're getting closer, I know you were thinking about 27. Now, the problem is, right? You're thinking about just a low. You're thinking about just a low to the low. But if we start exactly where this candle starts, right from this wick all the way down, that is indeed 27. You're going to look for lower PO3s for stop runs. 27, 9, and the 3. That's what's so important about this lecture and why we had to take all this fucking time to get here. Time and price. These numbers are not random. The more we talk about the numbers, the more you're going to be comfortable with when is a stop run happening? When is it a full retracement? How do I know that when I get to a 4 hour like this, we start consolidating, that I want to find another bullish fair value gap in here? And again, I love this because we talked about the 243, the 81, and the 27. So 243 is what we're referencing that price is going to get all the way through, right? Now watch this area here, just a stop run that leads you to your fair value gap. And it's going to lead us to current price. I mean, current on the replay, right? There you go. Now your fair value gap, it's going to be time frame specific, eh? And where you going to find it, eh? You're going to find it in the same place you expect it to be. And another one for a bonus, good measure. Similar to the last scenario that we saw, where there were dual fair value gaps like that. Killer. So killer, bro. Yep. That's sick right there. And again, staying right on the basic ones, not talking on the breakers or mitigation, although it's there. And you see how price goes right from your fair value gap and dominates that. This is your hour chart. This doesn't take long. Gold running the 81, insane. But what's dope is, again, ready, watch. We're looking at this. So let's annotate all the way. So 81, PO3. I got. Just go inward. Where else could you have gotten in if you missed these? You guessed it. Oh, this one's sick. Oh my God, this one's sick. Fair value gap with the low combo. Ooh, that is sick. Yeah, you buy that. That was sick. And again, look at how many areas that you can get in. Okay. And again, what do we depend on right after our fair value gap? Liquidity void. We want that. You want that. You want that liquidity void to activate. You want that, my guy. You absolutely want that. And really quick, for those who are understanding of this, right? This day here, and the reason why you would be interested in all of these, this is so if you're understanding of plus or minus one, you know why this would be significant. Okay. And for those heavy hobby heads, you know what I'm talking about. You know what I'm talking about, why this is important. It works. March 28th does its job. This is your. Let's find the 29th. Where's the 29th? Where's the next day? Oh, wait, we passed it. Oh, there is no 29th. Oh, see? Exactly. 28th then. I was thinking there's going to be another day. There was another day. So, now, there you go. I love all of these points here. Very easy to use. Emphasis on that, right? Anyway, but do you see what I mean? And like why you can't really be like too pissed off that you missed like a certain PD ray? Because you could find the same algorithmic structure in the same fucking spot. And again, we could play these out. And we're downshifted. So we can go to current. Look how price plays perfectly off these dealing ranges. Look at that. Just so perfect. And that's a real higher low or high and low. Same thing here. What's stopping you from trading the levels, bro? What's stopping you? Look at that. That's clean. 27 does the Lord's work on scalping and day trading. You see the stop run. Now pause it. Let's get back down here. What the fuck happened there? Obviously, it runs to the 27 EQ on this dealing range. But this is what I mean about it being a stop run down, but this creating liquidity for you to attack versus you need to focus on sells. See? You completely rejected a dealing range and came all the way back to what? EQ. And you take support. But you know what the funny part is? Look at the range. It's completely filled in. You have consolidation at the low, consolidation at the high. You dip back here. There is no power through liquidity down here. Everything's closed. Everything's closed. You're going to support from EQ and run higher. And again, that's why when you're half and whole shifting, you're going to mostly be whole shifting. But that's why you can come in and dominate price like this. See where price came from. Just like that. See what I mean? EQ does it again. And you're back in that dealing range. Is that going to break liquidity? You guessed it. Obviously. Is it going to support from this low? Ooh, apparently not. And where does it make it to? Ooh. Not only supports from the EQ again. Look at that. Oh, that was so sick. Now let's get back there with that one. That was gnarly too. And no, I have not sparked my next blunt yet. I know you were thinking about it. But it's sitting in front of me though. Now watch this. Power of 3 liquidity. Like I said, how you're interacting with your dealing rates here is different from the last. The last one was completely closed in. So when you see how this high and this high failed to reach the high here, stop run, stop run. Where are you going to find fair value gap? Let price give you a stop run. Now, again, time frame specific, it looks wild in here, right? But you understand the liquidity needs to be met. And look at the support right beyond your EXT level. Oh my Lord. Blast. Now, this is important here. That's where you shift it. And we're back up. Now watch. Now, this is where people get confused. Because they're like, well, where did price come to? You needed to back out for a second. We understand the liquidity. We see where all these places where price gave us opportunity. Watch. This is nothing but playing a game of time and price. It's nothing but a puzzle, and you need to get used to it. Fair value gap, GB level, 1 hour time frame. This is now your April 2nd fair value gap in the same spot, met with twice and liquidity. Where do you need to focus? You need to stick to taking entries in the right PD array levels. I mentioned how big the 81 is for gold. And look how much time is elapsed between start of April we mentioned what April was too. All right. Now, whatever. Start of April. This is literally not even a week. And it runs the shit out of this partition. People say, oh, well, what about that? Is it going to, I was going to say that. Let's look at it. Hold on. Hold on. Hold on. Hold on. Hold on. I was just going to say, did you see that massive breaker? It was too fast for me to explain it, but I saw it before it stopped printing. But this is the thing here. When we stopped, right? Let's be clear. What's a breaker look like? Bullish breaker. Talked about bearish ones. What's a bullish one look like? It's going to go up. It's going to go down. It's going to go up again. It's going to support from that high, right? Just like this and go up. So when you look at it, in reality, it's like this. You know my style now. You've seen how I teach. Understand it. All right? It's always this little point here that gets left. And it's always a big liquidity point. Like there's nothing above here. It's the same thing when we're looking at price here. So the same way, again, we could replay it too. Here. Now, typically, I can see this when price is printing. I can see it on the 1 minute chart, 5 minute chart, daily chart, doesn't matter. Price gives you an old high like this, and it goes up and it sticks out like that. Yeah, I can see that. And we're in a breaker level. Okay. So when price starts printing like this, and I see it curling down, what I'll normally do is I'll tell my students like, hey, there's a breaker coming up. We left the high open here, and this is what I'm looking for price to support from. Okay. It's gonna fake act like it's going to run like this. It's funny as shit. Because every time you see something like this, it makes, again, we talked about flout, right? Fractal flout. So it makes buyers and sellers get real like crazy in this area. They get scared. So there's a lot of buy stops triggered on here. It causes people to activate buying. And again, it's not ready yet. Not saying the direction's wrong. It's just not ready yet. It's going to pop back down aggressively as shit. And it scares everybody. But again, look at the objective. It dips right there and stops. Took an hour to do it. But why would it go this aggressively? And again, it causes more liquidity to generate at the top of it. You got to get used to seeing when liquidity is being generated live. That's what you need to do. Do not get scared and think this is a full-blown motherfucking reversal, because it's not. It's not. That's why a lot of people start buying this shit here, get scared, start trying to sell this shit here. You get stopped out on this up run, so you try to buy it again, then you fuck something else up on your account. And then this motherfucker happens and you really get scared. Then you're like, damn, you start having those thoughts like, yo, I knew I was wrong. I should have sold it. And then you start trying to get comfortable or hype yourself up for sales. And this motherfucker happens right here. And you're like, what the fuck, bro? Yeah, account liquidated. Unfortunately. If that sounds like a familiar experience, And again, I understand you get anxiety. I used to get real bad anxiety about that. I used to start buying, selling, buying, selling, knowing I no idea what the chart was going to do. But I've learned now. So where you have these levels like this, right inside your breaker level, it's going to create a high. And again, let's trace it. It's going to give you a high, go down. It's going to break it and come back to it just how it does here, right? Right up. It's a really interesting structure, isn't it? And the breaker fair value gaps, oh, don't even get me started. Again, you're always going to find a nice little gap in the middle right here, right? Nice little gap you can trade from. So if a lot of people, they say they traded a nice fair value gap, in reality, they just traded a nice breaker or mitigation block and have no idea. But this is clean every time. I mean, we look at it a bunch. But the same way that we see a scenario like this, again, I'm saying you can come in and really snap. So we've already talked about your fair value gap here, the breaker up here. And again, even if you just want to be like, kindergarten level, don't have to think very much, liquidity void, right? Super aggressive. Long long expansion or long run starting from that level. So when price starts to start spooling here bullish, you might want to think about taking sells, my guy. My bad, buys. But you see my point and where you ultimately make it to. And so this was only part one of our high time frame PD raise video, but we had a lot of fun. And yes, it'll be repetitive because you need to learn over time how to view this in more than one scenario, more than one chart that I show you. Come in and do this all the fucking time. All right. So, till next video, I will catch you guys in the next one.